All right. Everybody can hear me okay? My sound on my computer is a little soft, but as long as you can hear me, we're good to go. All right, so today we're going to talk about Allstate and let me go ahead and share my screen. All right. So Allstate, all right, you're in good hands with Allstate. All right, um Allstate's got a massive portfolio of products. They've got everything, right? With the exception of ACA. But they've got their hands in the short-term space, they've got their hands in the indemnity space, and then the supplemental space, right? I like Allstate primarily for the supplemental products. Okay. I think that Allstate, I'm going to talk to you guys today quite a bit about my favorite sub product, which I include in every single piece of business that I write. And I'm not exaggerating one bit. Okay. This sub product is in every single deal that I do. All right. And you guys will see how it mirrors really nice um, with the ACA plans and the Life X plans and the reason that we plug it into limited med, right? We'll talk about how we sell it. But um you know, first thing I want to stress about the sub products, okay, and why it's so important. In fact, when I first started my first agency benefits management team, it was an ACA um, company. We were, focused heavily on the ACA, but we didn't even track the ACA business. I mean, obviously we did, right? But we didn't count it towards sales production for agents. Okay. But it was just like gravy. We tracked the supplemental products. Okay. And the reason is because, in my opinion, you didn't have a deal unless you added subs, right? The supplemental products will add more than 100% to your income. So if you are producing in the ACA space and you sell supplemental products, you will double your income by adding those subs because the subs pay more than the ACA plans themselves. All right. And I will again show you guys how to bundle those and how to enhance your not just your income, but obviously your client's protection. All right. And how to make a very, strong presentation, build a very strong case as to why you're selling it, right? So you don't come across like you're just trying to upsell these customers, right? And trying to, drop as much stuff on them as possible, right? I mean, it's necessary, okay, for a client to have an accident plan or a critical illness plan or a plan that pays their deductible if they're hospitalized, right? Because especially if it's an ACA client, they probably don't have or certainly wouldn't like to have to stroke a check for an $8,000 or $9,000 max out of pocket, right? So when you can cover that out of pocket for them for a minimal premium, then they're going to be all for it. All right. So let's dive in real quick. So Allstate is a sub play primarily. Okay. Once you get appointed, this is your login page, and I like how they're laid out. I don't know if you guys can see the top of the screen because my Zoom controls always tend to be in the way. But for what I'm looking at behind the Zoom controls, here, let me minimize it a little bit.
It has quote and enroll in back
Yeah,
office, so I
quote and
can't see
enroll.
those.
Yeah, okay. So you don't see the Zoom controls. Okay, so quote and
Correct.
enroll, back office. You've got it all right there. And I'll actually need to minimize it anyway because I want to go to quote and enroll. All right, so quote and enroll is where you're going to um, quote and enroll, right? Obviously, and get
I was about to
all the
say
yeah. That's where you're going to quote and enroll. All right, meeting over. Go get them.
done.
So, but you're also going to be able to get brochures and product details and everything is going to be done through here. Okay. So I'm going to go ahead and quote myself. All right. So YouTube doesn't take my training down. I'm quoting myself, YouTube, nobody else. Okay. Effective date 6/1/2025. Oops, 2026. Sorry. Okay. Childhood zip code 60148. Date of birth 1180. Male. Here's where I'd add my wife and my dependents. Just for time purposes, I'm going to leave them off. Okay. Quote now. And here we go with the gambit of products. Okay. As you guys can see, you've got short term available. You can actually quote on the marketplace through the portal here. They've got I don't know if they use um, Health Sherpa or some other third party, but they have the ability to quote on the marketplace. But we're not going to touch on that today. So short term medical, fixed indemnity. So again, they've got products in the limited med space, but if you're on, I think a training was 2 weeks ago was Manhattan Life, or was that 3 weeks ago? Anyway, we've done the
Three.
Manhattan Life training, by far the best limited med product on the market. Allstate's not going to be competitive price wise or benefits wise. Okay. Um, and then on the short term too, guys, and we'll just touch on that real quick. I don't sell a lot of short term. Um, I don't think that here, I'll just show you real quick here. So short term, do you smoke? No. They have the ability for you to get preferred rates. But let's just say, no, I haven't had coverage. My height and weight, 5'7", 2 1/4. And I'm not rewriting an existing short-term med. I just want to show you guys the rates, the standard rates here. Looks like in Illinois is only going to give me a 6-month block of coverage. There's other states where you can do a 36-month block of coverage. But this is, that points I was just about to get at. Short-term medical is the main product that has been where the tug of war has been played with, right? When we talk about our wonderful politicians, right? The blue side and the red side, it's that short-term product that has, I think, because short-term med was the um, probably had the biggest impact initially when the marketplace rolled out in 2014. It was short-term medical that was the strongest alternative to the ACA plans. All right. And so the short-term medical business exploded, right? And that's why you'll see Allstate is probably the biggest player in the short-term space, but United Healthcare also is another very big player in the short-term medical space. Other carriers that have done really well in short-term, Pivot Health, um, HII. I don't even know what they go by anymore. HII, to be honest with you, but Aspen, another short-term med carrier, but the short-term med again, it was 12 months initially when the ACA became, law, and it was very attractive to go that route because it was a lot less expensive than the ACA. But then, Obama knocked it down to 3 months. Then the industry, came up with the loophole where you could chain 4 3-month policies together. Then Trump comes in term one, jacks it up to 36 months. Biden comes in, knocks it back down to 3 months, and closes the loophole, doesn't allow you to chain. It's jacked back up to 36 months. So in some states, you can go up to 36 months. But then there's been other states that have just been like, the hell with this, right? We're staying at 3 months or we're staying at 6 months, right? Again, not because it's been such a yo-yo, but I'll tell you guys, actually, I had a client that had short-term medical and was diagnosed with cancer about 3 months before the termination date. Okay. That is now, I don't lose very much sleep or any sleep at all. Because I sell ethically, I try to protect my clients the best way, but this is a situation that kept me up at night. All right. When a client has a short term plan and they're diagnosed with cancer, when that policy expires, the only option they have at that point is going onto the marketplace. The only option. But what if the plan expires in the middle of the year, right? And it's not open enrollment. Short-term medical is not a short-term medical plan ending. You can't use as coverage ending, right? Because it's not an ACA compliant plan, so you can't use that as a qualifying life event. So anyway, for that reason alone, when I am quoting clients, I steer away from short-term medical, right? So I don't use short-term medical these days as a primary health insurance option for clients, for that main reason, but also, and this was the whole point I'm trying to get to, um, let's see here, last coverage date. No, we don't care about that. All right, so 6 months. But also the price tag, okay? There's no plans of it. Okay, so Illinois doesn't even have the plans. Let's go back. I want to show you guys the price tag real quick, just because you guys are going to see that
Do it in Tennessee. I think Tennessee has them.
they're not competitive anymore. Okay, short term with plans
Do
like
three
LifeX or Iron Health or
do three
give
seven
me a
oh six
Tennessee again.
nine. 37069.
Okay, all right. So no, 5.7. I really got to drop. I would love to get under 200. Okay, standard rates. So here we go. We can go up to 36 months in Tennessee. So if the prices were, oh, here we go. Sorry guys. That's one that I let go. I don't have very many clients there. 33511. All right. So Florida, 36 months. If this price tag was, say, 30% less, then maybe. But check this out. I mean, here you got a single 46-year-old male. All right. A $2,500 deductible with a 50-50 co-insurance, max out of pocket 5 grand. So that would basically be a total max out of pocket of 7,500 for almost a grand. $944. It's not like, why would I do that when I can go to LifeX for $400, right? And get real ACA compliant major medical. It doesn't make sense. All right. You go a little higher deductible. I mean, you can't even make anything reasonable here. $25,000 deductible, 100% co-insurance for 441. They've literally priced themselves out of the game. Okay. So short-term medical is not a reasonable option for standalone health insurance unless it is you're literally doing what it's intended for, right? So in other words, somebody needs to cover a gap. They lose a plan in October. Their ACA policy won't kick in till January 1st, and you need to cover a 2-month gap, right? Then that's when you would use short term. Okay, so let's get off short term now. I want to go directly into my favorite supplemental product, which is called the Plan Enhancer. Okay. The Plan Enhancer is first and foremost, it's an AME. What is an AME? Accident medical expense. Okay. It's a policy that will cover the medical expenses up to whatever benefit amount is selected. Okay. So that's what it is first. And then it's got a couple of riders. So let's say, what's the max out of pocket on the bronze plan for 2026? It's 10.6, right? So they've literally built these benefit levels in line with the maximum out of pockets on the ACA. So 10.6 is the max out of pocket. So I can go ahead and sell a $10,000 AME plan for $8 in Florida. Now, Florida is is low cost. Like the cost in Florida is low. You're not going to see it in $8 anywhere else. It may be 20, right? 15. It's more reasonable, but $8 in Florida. Okay. So 10.6 on accident. So I'm going to add that. And now here's my riders. Okay. I can do a cancer, heart, stroke rider. Okay. So that's 10.6 cancer, heart, stroke. Or I can add a sickness hospitalization rider, which I always do. All right. Or I could lump them together and do both. Okay. Which oftentimes I do. Okay. Depending on price tag. All right. But I always add this rider. Okay. What does this do? Let's say that just due to price, I'm going to add the sickness hospital. Everybody knows what a cancer, heart, stroke policy is, right? Policy pays out in the event of cancer, heart attack, or stroke up to the benefit amount selected. Okay. So we've got a AME plan. Our plan enhancer now that we've built here is an AME plus sickness hospitalization. What does that do? Well, for $24, okay, I have an accident medical expense policy up to $10,600. Okay, but I also have up to $10,600 in hospitalization if I'm hospitalized due to an illness. All right. Now the AME will also pay out if I'm hospitalized. It's not going to pay out just in the event of an outpatient accident. Okay, it'll pay out if I'm admitted. But then I've also got that hospitalization coverage for sickness. So what does that do to my pitch now, right? Imagine you're selling a bronze plan on the ACA with a max out of pocket of 10.6. And it's got some co-pays for this and co-pays for that, right? But then you can tell them, I've got you covered 100% for accidents and injuries. I've also got you covered 100% if you're hospitalized due to a sickness. Okay. What so what's subject to the deductible then, right? Because clients will ask that all the time. Like, what are you going to hit your max out of pocket for? It's going to be due to an accident or an injury, right? Or because they were hospitalized for something, right? So what are they going to hit their max out of pocket for? What's subject to that that deductible and co-insurance then? Just to give some examples, let's say that little Johnny has an asthma attack. He goes to the emergency room and he's not admitted. Well, that wasn't an accident. It wasn't an injury, right? And he wasn't admitted into the hospital, right? So something like that would be subject to the out-of-pocket maximum. They would have some out-of-pocket for that. Outpatient diagnostics like an MRI or anything, right? Moving through the healthcare system and doing outpatient, right? You have to have a skin tag removed or something, right? It's not an accident or an injury. You're not hospitalized for it, right? So there are some things that, could be subject to the out of pocket on the plan. But how strong of a presentation is that when you can literally say, Mr. Jones, 92% of the 92, and actually this is, write this down because this is gold I'm about to drop on you, right? So I say, Mr. Jones, 92% of the time when somebody meets their deductible or their out-of-pocket maximum, it's due to an accident or an injury or because they were hospitalized due to an illness. Okay. 92% of the time. So, Mr. Jones, I'm going to give you 100% coverage for 92% of the reasons that you would meet your max out of pocket, right? And the other 8% is some of the examples that I just gave you, right? Little Johnny has an asthma attack, he's outpatient, right? Skin tag removed, outpatient. Diagnostic test, outpatient, right? Unless those diagnostic tests were due to an injury, right? If you need to have an x-ray or, an MRI on your knee or something because or your back because you got injured, right? That's a different story. But okay, so, so again, that is a very strong presentation to add $25 to somebody's policy, right? And obviously the rates are going to vary, right? But for this, 46-year-old single male in Florida, it's only $25, right? And what that does to your paycheck now, guys, the the comp levels on these plans, the plan enhancer, I think the lowest street level is like 30% or 35%. It's very solid, right? So when you're selling an ACA plan for a family of four, right, or a LifeX plan for a family, or a LifeX plan for an individual, whatever, and you slide in a $30 to $75 plan enhancer, okay, those were the numbers that we counted in the beginning when I started my agency 11 years ago now. And
Those
then,
pennies make
as I
dollars,
said
right?
before, dental and vision sells like French fries, right? So we want to add the dental plans. Now I'll go over the dental in a minute, but the dental is, when I sell dental, it's primarily Allstate Dental because they have the best dental plan on the market, in my opinion, currently. All right, and I'll go over that with you guys here in a minute. All right, so that is the policy that I include for every single deal that I write. Okay. Um, Obviously, it makes sense to slide that in to a major medical, right? What's the purpose of it? It's covering the out-of-pocket maximum. But why would you slide it in to to an indemnity plan, right? To a Manhattan deal or to a Philly deal? Why would you slide it in? Well, when you go through those policies, right, the indemnity policies, they've got very rich benefits for the majority of the things. Like, you get $500 to $700 for an MRI. People, can find MRIs for $300-400, right? And this ties into why we sell V-Care advocacy too. So I'll get to that, right? How do you find the $300-400 MRI? You lean on the advocacy team to do it, right? We don't want to give our clients a homework assignment every time they have to move through the healthcare system. We pay people to do that, right? Um, but so the indemnity plans are very benefit rich, right? For again, $500 to $700 for an MRI, $175 for a doctor's visit, 4,000 per day for room and board. Those are strong benefits. You know where indemnity plans are weak? In the emergency room. Okay. So quick education. Medical billing runs on a baseline basically called reference-based pricing, okay, which is pretty much in line with Medicare pricing. Okay, so you can say like the Medicare price tag is reference-based pricing, give or take, a few bucks in either direction, but usually pretty in line. And when so, and that's very regulated by the government, right? So the government says, for people that are on Medicare, doctors and hospitals can only charge this much, which then the insurers like because they only have to pay that much, right? So that's Medicare pricing, very regulated. For people under 65, okay, that is where the healthcare system has carte blanche. And it's just like, it's like, yeah, what's this cost today? 10 grand. What's that cost today? I've seen an Advil billed out at $800, okay, from the hospital. So some of these medical bills that I've dissected is just, it's sickening, okay? But they do that for people under 65. The reason they do it is because there's a part of the ACA law called the MLR, the medical loss ratio, okay, which states that 85% of the premium dollars that are paid for an insurance plan must be paid out in claims, okay? And the medical systems know this now. So if a patient comes in with Florida Blue, right, a national PPO, right, from one, with a blue shield on the card, right, a blue access card. They know that they could basically slap whatever price tag they want for whatever test or service they provided, and the odds are good they're going to get paid, right? And that's what they do, right? But when they have customers that come in with an indemnity plan or they're paying cash pricing, right? They still want to get paid, but they likely know that they're not going to be able to price gouge them, right, to get paid. So they play what I call the billing game. All right. And I had a long conversation with about a year or two ago. I acquired a client who's a surgeon, right? And him and I had a very long conversation about this, and he agreed. He's like, he goes, I do it. I play the billing game. Well, of course you do. I'm a businessman, and I would do the same thing, right? Um, but that is one of the things. The MLR, the medical loss ratio, is one of the things, in my opinion, it's the main thing that drives cost when we're talking about the cost of healthcare, the cost of premiums. When you tell an insurance company they only get 15% of the money that they collect to operate, that 15% goes to paying the lights on at the corporate office, goes to paying for their employees, goes to paying for um, the small commissions that they do pay out, and then of course the executives need millions and millions of dollars, right? So that money goes towards paying um their operating costs, and they only get 15%. So what are you going to do if you only get 15% of the money you bring in to operate with? You're going to raise the costs, right? And if you're a medical system and you know that 85% of the money that the government is sending to the insurance companies for the subsidies, if you know that you are entitled to 85% of those subsidy dollars, what are you going to do? You're going to raise the costs, right? So it's very obvious. If they repeal that one piece of the law and scrap the MLR, and said insurance companies can now set their prices the right way, right? Get the team of bean counters, right? The actuaries, get them together, let them do what they do and set the price tags the right way. Um, and then, that's going to bring the cost down, right? And then the insurance companies, let the insurance companies negotiate with the medical systems. Well, the medical systems aren't going to be doing as much price gouging then, right? So anyway, you don't have to be an economist to know that that piece of the law certainly drives the cost of care up. In fact, I was at a conference several years ago at the Reagan Library in Los Angeles, and the guest speaker was the congressman with the eye patch. Um, I can't think of his name right now. But anyway, I stood up and I told him, I said, if you want to lower the cost of healthcare, scrap the MLR, right? Get rid of that. And I said it just like that because, first of all, I wanted to get my point across, but second of all, I wanted to see if he even knew what I was talking about, right? And I don't know if he did, but he did say that that part is being debated as we speak, right, in Congress. So that was 5 years ago now. So obviously, whoever wants to keep it in there lost the debate. I don't know who would want to keep it in there, but anyway, just a little education on medical billing. Okay, so to get back to why you would sell this with an indemnity plan, where the indemnity plan gets smoked, all right, the benefits again are pretty rich across the board. And when doctors know that they're going to get paid something, right? You can usually find good doctors, right? You can usually find doctors and medical systems that will charge about 1.5 to 2 times that reference-based pricing, okay? That baseline of pricing that we were talking about. 1.5 to 2 times, okay? In the emergency room, everything costs on average 10 to 15 times reference-based pricing. Okay. 10 to 15 times reference-based pricing in the ER. Everything is more expensive in the ER. Why do they do that? I don't know. My guess is they don't want to clog up the ERs, right, with people going there for the sniffles. That's the excuse that they often give us is that they want to promote primary care, right? So they make it free with the policies, right? They want people to get their testing done annually so they can catch diseases early enough, right? They don't want people using the emergency room for just their all-around healthcare, right? And that's the reason why urgent cares have become so popular in the last decade, right? These minute medical clinics all over the place. But everything in the emergency room costs more. Okay, 10 to 15 times reference-based pricing. The benefits the um, on the indemnity policies for an emergency room. I talk about Manhattan, and I'm really high on Manhattan, right? The benefit for the emergency room is $300. Okay, So what I tell clients, and I don't go this deep for a client, right? You guys are agents, right? I don't tell any, I'd have their head spinning, obviously. But I do tell clients, I'll say, look, everything's more expensive in the emergency room, right? And the benefit on your policy to the emergency room is 300 bucks. Okay. We add this plan enhancer in, right? Specifically for the event of an outpatient accident where the emergency room cannot be avoided. So, Mr. Jones, here's the way you want to handle an illness. Okay. You want to avoid the emergency room like the plague whenever you can, right? But here's how you'd handle an illness. Okay. In this order, if it's something you can diagnose yourself, tell a doc, call the doctor and just get it done. If it's something that you don't know what's going on with you, try to get in and see your regular doctor, right? If it's something that you need to see somebody right away, go to the urgent care. The benefit on the urgent care, the benefit for the urgent care on those plans is very good. Okay. In that order, right? If you have to go to the ER, you go to the ER. It is what it is. We'll handle medical bills later. That's why we have the V-Care advocacy team ready to go. Um, but for the outpatient accident or injury that the emergency room cannot be avoided, that's what we have the plan enhancer for. Okay. So that's how you sell it with an ACA plan. It's there to cover the out of pocket maximum, and you sell it with an indemnity plan to give you extra coverage specifically for the emergency room. Now, the benefit will pay out no matter what. It doesn't matter if you go to the ER or if you're hospitalized, but we slide it in here specifically to fill in that gap of the low emergency room coverage. Okay, does that make sense? Um, all right, so that's the plan and answer, guys. I love this policy. Okay, sell it with every single health insurance policy that you sell, whether it is the ACA, the LifeX, Iron Health, Indemnity, doesn't matter. Get this plan enhancer in. Now, there are some states where the plan enhancer is not available, or the riders are not available, like Georgia. Okay. What do you do in that case? You sell a Triomed. Okay. And you've got two types of, actually, one type here in Florida. You have the Triomed guaranteed issue. Okay. They had a standard issue before. Um, but it's guaranteed issue. It is a accident medical expense plus critical illness. Okay. So pick your benefit levels here. AME plus CI, and slide it in there. If I'm selling a bronze plan, okay, get rid of this here. If I'm selling a bronze plan, I'd maybe want to sell this $10,000 accident and critical illness policy, right? If the plan enhancer isn't available. So now I give them $10,000 worth of accident coverage, $10,000 worth of critical illness coverage, right? Maybe hit them with another statistic, right? 90% of the time, if you meet your deductible, it's due to an accident or a critical illness, right? And so I'm going to give you, essentially full coverage, effectively full coverage for those things. Okay. So you sell the Triomed if the plan enhancer is not available or doesn't offer the riders in any specific state. Okay.
Hey, Drew.
Moving on. Dental.
Drew, real
Yes,
quick,
sir.
there's a question. Can you go into a little detail on the AME and chronic illness brochure?
Yeah. AME and critical. So here the Triomed. So
Yeah.
AME is again, AME stands for accident medical expense. So if we have, let's say, a $10,000 Triomed plan, okay, it's going to pay out 10 grand. That's the critical. Where's the accident? Did they even give you an example for the accident? Accident medical expense. Here you go. So accident, it's going to pay out up to 10,000 for the medical expenses that are incurred for any accident or injury, right? And then we've got the critical illness, which is pretty, standard to any other critical illness plan that'll pay out, 100% for heart attack, stroke, organ transplant, cancers, and then you've got some others here, 25%, um, 25%, right? So I won't go line by line, but you guys can read that, right? So it's an AME and critical illness policy. Okay. Um, but again, the plan enhancer by far superior, specifically for the sickness inpatient piece, right? Because it doesn't matter if you're hospitalized for critical illness or if you're hospitalized for COVID, right? It's a sickness and you're hospitalized. So you have that extra benefit there to pay out. Okay. And then when you couple it with indemnity too, think about this, guys. If you sell an indemnity plan, Manhattan specifically, right? Going back to the elite policy that I love, right? It's $4,000 per day inpatient, right? You get a $2,000 admission benefit, right? Then I've got a $10,000 600 plan enhancer. So literally, if I have a client that's hospitalized on the first day, um, the first 16,000 or 16,600 worth of bills is covered 100%, right? Whether it's for an illness or an injury, the first 16,600 is covered 100%. Okay. Now that doesn't mean that they may not have some bills, right? In that event, um, they may certainly try to price gouge. In fact, you can almost rest assured that if a client is hospitalized, that something in that itemized bill is going to be a price gouge. All right. When that happens, that's what the advocacy team is for. And I want to touch on that at the end because I sent Phil his link today to get you guys appointed with
In
VQ.
the
All right.
chat
So,
too.
uh, all right. So moving on to dental here. Uh, Dental and vision. I tell people that Allstate has the best dental plan that I've seen because most dental policies have an annual maximum, right? And up until recent, a $3,000 annual maximum was pretty good. I think maybe like around 2020, right around COVID, we saw a $5,000 maximum, and that was unheard of. Now I see $10,000 annual maximums on dental, right? Um, well, this plan has no annual maximum, the copay 2 plan, okay? No annual maximums. It's going to be a little bit more expensive than the rest, but obviously, it's unlimited dental coverage. Not only that, but it also covers everything with a copay. Okay.
Does that
So,
include braces or no?
what's that?
Does that include braces and that or just
No, no
regular dental?
orthodontics. No
Oh, okay,
orthodontics.
okay. Damn. All
Um,
right.
yeah, I'm having that debate in my household right now. Does she need braces? Doesn't she need braces? She's got a little snaggle tooth. I'm like, it's cute. It adds character. You don't want to get rid of
Amen. Amen.
that. um, so anyway, let me go over this plan here. I'm gonna show you the brochure here, the dental brochure. Guys, since I've been showing this dental plan, since I really just started working within the last year again, right? I took a little bit of time off. And so I did a little dive into these products and said, okay, what do I want to sell? I don't think I've sold another dental plan since I got back into the ring. I love this dental plan. And again, I know it's a little bit more expensive, but it's a really easy presentation. And it's like I tell agents all the time, clients will most of the time go with the benefits, right? Especially when you're talking like 15, 20, $30 a month worth of premium, right? They're usually going to go with the benefits over saving a few bucks, right? Now you have a family of four, the savings might be, say you have a $3,000 annual maximum or a $2,000 annual maximum that's coming in at $50 for the whole family, and you're trying to sell $120 dental plan. Yeah, maybe, right? They may go with the less expensive one, but even then, you know, in most cases, clients are going to go for the more benefit rich, right? So let's look at this dental policy here. I probably have downloaded this 100 times on this computer. Okay. So the copay 2 plan. Okay. So again, the way I open this up, right? You guys know, right? If you've been on the last few meetings, I always say this. You'll hear me say it again Dental and vision sells like French fries. I never include dental and vision with a quote. When I'm sending a quote to a client, unless they ask for it up front, I do a pretty good job of qualifying them, right? I'll qualify them up front and get all the questions that I, need answered to find the best product to fit their needs. I try to get all of the objections out of the way when I'm qualifying, right? So by the time I get to the presentation and I'm presenting, any objection that comes up is, oh, well, we went over that, right? When we first talked, we talked about this, and you need something that, travels with you. You're an over the road trucker. You can't have an HMO network. You got to go nationwide PPO. Anyway, whenever I say to a client at the end, right, when the deal's closed, and I say, oh, by the way, did you want to look at dental and vision options? More than half the time, they're going to say yes, right? Just like more than half the time when they say, did you want fries with that? We usually say yes. I do anyway. I don't know. Some of you might be good and say you'd rather have a salad, but I'm like, hell yeah, I'll take fries. And you can biggie size them too, right? So would you like fries with that? Would you like dental and vision? Yes, I would. Great. Mr. Jones, I want to show you the best dental plan on the market. Okay. And then I will be honest with you, it's a little bit more expensive than the others, but it truly is the best dental plan that I've seen. And if you want to look at something less expensive, we can. But let's start with this one. And they're always curious, like, yeah, let's see it. Okay, great. So it's with Allstate. And who doesn't know Allstate, right? But by that time, remember too, I've already got them on the plan enhancer, right? So they know they're going to do business with Allstate. The copay 2 plan, preventative services, covered 100%, starting year one, no waiting periods. Okay. Um, services um, outside of cleanings and outside of preventative are grouped into 3 different categories. You've got basic services, major services tier 1, and major services tier 2. All right. Major services, or excuse me, basic services. Okay. In the first year, it's $100 copay, 100% coverage after that, $50 copay year 2 and beyond, no waiting periods. Okay. Major services tier 1, $125 copay year 1, $75 copay year 2 and beyond, no waiting period. Okay. Major services tier 2, $500 copay year 1, $350 copay year 2 and beyond, no waiting period. No annual maximums. Okay. So in the worst case scenario, okay, you need a crown in the first year. It's going to cost you $500 and you're covered 100% after that 500. And that's the worst case scenario, Mr. Jones. Okay. So, again, it's a very simple presentation. And, does anybody wear glasses in the household? Yes, we wear glasses. Great. We can go ahead and slap a vision on that. Now, vision is sold as a rider to the dental plan with Allstate. Okay. United Healthcare will have a standalone vision plan, which coverage wise, but with Allstate, it's sold as a rider. Okay. Um, so vision copay, $10 copay for annual eye exam. Okay. You just read it to them. $200 benefit for frames and contacts. Okay. Every 12 months. Lenses is a $25 copay every 12 months. Progressives, you get $135 benefit. Okay. And I didn't even know what any of this stuff was until I actually started wearing glasses about a year and a half ago. Right. I'm like, oh, so that's what progressives are. Okay, cool. But people that wear, they understand they know what it is. Okay. And they'll get it. Okay, got it. Great. And so we're going to go ahead and add this dental policy. And it's going to pop up and say, what level of vision would you like to add? All right. Let's add the level 2. Okay. Now this dental plan, I didn't pick the plan answer. I got to go back and do that. This dental plan can only be sold as an add-on to another Allstate policy. They won't let you buy this dental plan standalone. Okay. You have to buy it as an add-on. Okay. But if somebody say they just want dental, they really want this plan. Okay. You could sell them an accident policy for, a $2,500 accident policy for $3. Right. I've done that. I've sold a $10,000 term life plan for somebody to be able to get this dental. All right. But again, because I'm selling a 10-6 plan enhancer with sickness, hospitalization, and in Florida, it's so cheap that I might as well add the cancer, heart, stroke too, right? I can get that dental plan. Okay. So that's $108 in subs. If I'm selling a free bronze policy, I'm giving somebody a free bronze policy for $108 a month. They can also get 100% coverage for think about this. Okay, for $0, Mr. Jones, and you don't sell it like this, right? I'm telling you guys this to put it in perspective. For $0, Mr. Jones, you can have a bronze plan where you're going to pay 100% of your bills up till $10,000 until you meet 10-6 out of pocket. Okay. Or for $100 a month, $108 a month, you can have 100% coverage for accidents and injuries. You can have a $10,000 check in your pocket if you're diagnosed with cancer, heart attack, or stroke. You can have 100% coverage if you are hospitalized for an illness, right? And I'm going to add a dental policy, which is going to cover, no annual maximums, 100% coverage for preventative, right? 100% on basic services, copays, or excuse me, $100 on basics, right? You go through it, bang, 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 and you get the dental for $108, right? I'm telling you guys right now, especially when, a Chipotle burrito and drink costs $20 over the counter, people are fine with spending $100 on their health insurance policy when you build a policy like this versus getting a free policy that they just know is there, they're never going to use, right? It's just in case they're on their deathbed, the doctor's getting paid, which at that point they could probably care less anyway, right? Give them some benefits that they could use, right? And hopefully they don't use it, right? They always say health insurance is like lawyers, right? You don't want it until you need it, right? But you got to have it. So people are okay with spending $100 a month to have a beefed up health insurance policy like this. Okay. So anyway, that's why I love Allstate. Now, Allstate also has term life, okay? Very simple underwriting, okay? And I've sold some of these. In fact, I have one myself when it first came out. I'm like, yeah, I pick up $50,000 in term life. I think about 7 or 8 years ago I did. You've got and you guys would probably not sell it for the term life, but it's there, right? You can sell cancer policies here, right? You've got cancer, heart, stroke. Some states, obviously not in Florida, there are critical illness plans available. So they've got a hell of a portfolio. I showed you guys the price tag on the short terms, just so you can see the indemnity plans as well. Here's kind of their middle of the road policy. You get $150 benefits for $150 benefit for the doctors, $3,000 for a sickness inpatient, $4,000 for an injury inpatient, and it's $246 a month. That doesn't even come close to touching the elite plan with Manhattan, which is a hell of a lot more rich benefit wise, but it's also, I think, $166 for a 45-year-old male. All right. So not even close. Not even close with benefits, not even close with pricing. Right. Um, so we've got our 46-year-old customer here, Mr. Jones, and we're going to go ahead. I'm sorry, YouTube, it's me. It's not Mr. Jones, it's me. And we're going to go ahead and apply. All right. And application, Drew Jones. Okay. Add the address. Let's see here. I used to live at 3016 Greenstone. Only thing I miss about that place was the backyard for the dog run. There it is, 3016 Greenstone. Save, continue. All right, and here's our application. Is this insurance intended to replace the dental? No. Are any of the proposed insured persons replace any type of accident plan? Nope. Basic info. Is this your residence and mailing? Yes. Phone number. Type of phone, cell phone. Beneficiary. Wifey. Latoya Jones, wife. Okay, so you pick you pick the effective date and the premium. I think we made the effective date June 1st. So you pick the initial draft date. It has to be prior to the effective date. Okay. I always do it a couple of days before. And once that first premium is paid, then you get paid. So if I were to go ahead and say draft it today or draft it tomorrow, then I think it's next Friday. Yeah, a week from this Friday. They pay out every Friday. So next Friday it would be on my check or it'd be in my account. Please add a payment method. Credit card, bank draft. I love to do bank draft, right? Because people get credit cards stolen all the time. They're canceling them all the time. I don't like to have to chase people for billing info. So bank routing number, I think I got to add a legit routing number. What is the national Chase routing number? Let's see how good I am. 071-123-413, I think. Bank name, Chase, Drew Jones. I think that was the correct bank. Anyway, so
That's trippy.
go on to review the details, and you guys are going to love this next part. I agree. Signature. This is as far as I'm going to go, but this is the best signature process that I've seen in the business. I can email them or text them, which I always do text. I text them a PIN number. Okay. Text them a PIN number. And I'm saying, okay, you're going to get a text message with a PIN number. I'll send it over and I'll get a pop-up on this box. I'm not going to send it right now. But I'll get a pop-up where I'll enter the PIN number and it starts with A and then it's 6 digits. They read it back to me and that's their signature. It's done deal. All right. So you don't have to chase them down for signatures and all that stuff. All right. So you send them the text right there. Hey, you get a text message, right? You on your cell phone? Cool. Read this PIN back to me. That's their signature. All right. Done deal. And that's the application. Then as soon as you submit it and it's in, they will get an email instantly. Here's your plans. Here's what you signed up for. You signed up for the plan enhancer. You signed up for the dental. Boom, boom. And it's a done deal. They will get a dental card. All right. Nice shiny dental card. They still send the real nice ones, right? That you have to pull out of the little shiny laminated cardboard. And it's all good. Okay. They're not going to mail out a plan enhancer policy. Okay. So you got to let them know, hey, you're not going to get a policy for the plan enhancer, but it exists. Okay. You just have to know that it exists. You're going to get it emailed to you. All right. And you'll have a client back office. You can always go on and pull off your policy, but they don't mail out a big accident policy. So, you know, I mentioned V-Care a couple of times through this things, right, guys? And I want to just touch on it briefly here because this will be something that we talk about every single week. When you're selling health insurance and you're covering clients the right way, you're not, in most cases, not going to be selling the same company, right? In other words, to cover them properly, they may have to buy a LifeX plan or a Manhattan plan with Allstate supplements, right? So, no matter how thorough you are as an agent, you can't expect them to be pros. It's like when the plumber leaves your house and says, "Oh, we did this and that," right? You don't know what they did. All you know is that the flush works again, right? Cool. So, um, you know, where you let them know, hey, you don't have to remember anything I told you. Just know that I've got you covered. And here's the phone number to call when you need to use it, right? And when things, when what hits the fan. Okay. And that's the advocacy team. Okay. So in addition to everything that we sell, we're going to include an advocacy membership to VCare, which is priced right. It's $12 for an individual, 18 for a couple, and 24 for a family. Okay, we're going to include that in every package that we sell, which gives them access to the advocacy team, which will now make sure that they're, able to find that $300 MRI, right? Make sure that they're not being price gouged, when they're receiving healthcare services. If they do get surprise medical bills or they are price gouged, the advocacy team will negotiate those bills for them. All right. Make sure that they're submitting claims properly and getting all the benefits that they're entitled to, because all they know is they've got their insurance card. All right, I've got my insurance card. Here it is. Well, oh, I had an accident or an injury. Well, here's my insurance card. Right? They don't know to come back to the drawing board and submit a claim, with the accident, with Allstate for the accident benefits. And you might make sure that they need a quarterback, right? And that's what we call our advocacy team. That's their quarterback for their healthcare. Somebody who's running point, right? I'm throwing too many sports analogies at you. So quarterback, not point guard, okay? Quarterback, okay? They are your healthcare quarterback, all right? Um, so 5 minutes passed, okay? Not bad. What do we have questions wise here?
There was one question about the dental. That's on the confirming that's on the Aetna network. Medical and dental plan goes on the Aetna network for
Yes, it
Allstate.
is the Aetna network.
Okay. And the V care cost paid annually or monthly?
It is paid. It's paid monthly, but there is an annual discount. They could get a 20% discount if they pay annually. That's a good question. And we also do. There's also group benefits with VCare. $8 a life for groups. Um, and we've got some wiggle room on that price tag too, depending on the size of the group. So I host a training for VCare every second and fourth Wednesday of the month. And because last week I had some conflicts, my in-laws were in town. That's why we didn't train last week either. So this
Big
this month
conflict.
I've got a training tomorrow, so I'm doing the third and fourth Wednesday of the month this week or this month. But you guys, once you get signed up with VCare, you're going to get all our communications. We'll send a weekly email out. We've got a newsletter that goes out. So just and then I also include my calendar link too in all those emails. So anytime you want to book a one-on-one, the VCare team is fantastic, guys. They're always looking for agents to collaborate with on marketing, right? So if you guys have business socials like your pages, business pages for your socials, and you want to do some co-op marketing stuff, they're open to doing that stuff with you guys. And there is commission on VCare as well. Um, it's paid through Valor, so we'll get with Phil and figure out what those levels are.
I like the sound of that. All right, guys. Let's call it a day. I appreciate you, my friend. Again, anyone who wants the contracting, let me know. I did put in the link for the VCare. You just want to look up for Valor Financial Specialist inside there. And we'll keep rocking and rolling here, getting prepped for the third quarter. So There's no breaks, no summer breaks. Always be closing, guys. No, just kidding. Thank you, Drew, and we'll see you same
Thanks,
bat
guys. Have a
time,
good week. See you next
same
week.
bat channel. Later, guys.